So with that being said, let's go ahead and transition in. So like I was telling you guys, Satheesh, he's a good friend of the royal legal family. He's been around for a while. I've done a lot of work with him. And he's got a lot of knowledge around this ideal of multifamily acquisition. So with that being said, Satheesh, if you will, just give us a little background, how did you get into it? What's your day-to-day look like? Tips, tricks, things like that. And kind of once we get the base foundation, we'll open it up for Q&A.
Excellent. Thanks for having me, Megan, first of all, and thanks for everyone their time. I think actually Charlie kind of summed it up what I was going to say. I think we can just close it and go to Q&A. He just kind of nailed it on the head, right? So yeah, like I started with single family, and I mainly you have much more control on which place you want to purchase, and you have day-to-day control over what's going on. And I was back in California when I started investing, and you can't get any cash flowing asset in California just because of the market, but you can get good single family homes that appreciates double, triple in just a matter of few years. So even in single family, you have, based on the demographics and location, the investment type is different. People outside of California don't understand the California market, and people in California don't understand market in, Tennessee, for example. So, but now in the last few years, it doesn't matter where you bought it. I think, everyone is doing really well. So that's great. But I think back in 2019, I've had around a big accident in one of my single family home, and some car ran through a garage, and thankfully no one got hurt. And that's when I started to realize, like, I can't scale with the single family home. So I gotta find out, whether, there are different ways. There is no bad way to invest in real estate. That's what I would say. So as long as, your exit is not forced, like you have to liquidate, then it might be a bad investment. But as long as you can hold, I don't think, there's, long-term rental, short-term rental, commercial, retail, apartments, everything has its own pros and cons. So basically, based on your individual capability is where, you have to invest. So, so I was looking at all other, including self-storage, retail, triple N's. I was looking at all those different types. But multifamily, as in apartments, large apartments, came on top of it because of the research I did. Just because of, people need to live in a place regardless of housing market, whether it's a boom or a crash or a recession, or, market is doing well. So in any cases, that apartment complex is checked out. So I decided to pursue that as my passion. And the first time, it took me almost 9 months. And obviously, multifamily is a completely different beast compared to the single family home, because it's both real estate and business. So you need to understand, because it's based on your net operating income is the value, based on the cap rate, the value is assumed. So it's a little bit different than single family. It's just not real estate. So you need to have a real good team to actually acquire and manage the asset. So I think that's where most of the people find trouble, because, like Charlie, if you're in Hawaii, you need a boots on the ground. If you're going to look at, Tennessee or Texas, you need a reliable person that can do the due diligence for you and let you know. You can do all the research, like population, crime, and everything in internet. It doesn't matter where you are, but, in every city, there is a good part and bad part. It doesn't matter which city it is. So, that just that one street cutting on this side and that side makes a huge difference for property and property values, because tenants prefer to live in one school district versus on the other side of the school district. So all these are, basically, the person who is a local or, who can go often will know that place. So it's a team sport. So there's no, single winner in multifamily. You got to have a team of, lawyers, because for multifamily, especially when you go for larger apartments, it becomes a syndication. So syndication is essentially governed by SEC. So you need to keep all the documents clean and everything, because you're actually selling securities to people. It's not just a regular investment, but they're buying into the LLC that holds the asset. So there's a lot more to learn. So fortunately, I found a partner who's in military, but he's a lawyer. So we complement each other in terms of legal stuff. He takes care of that, and I work on underwriting and talking to the insurance companies and do that stuff. So I think the bottom line is just getting good partnership, good team in place to acquire multifamilies. And you like you said, Charlie, the economies of scale is exponential, basically. In birds, like I spend the same time acquiring 100 units, and right now we are under contract to acquire a 404 unit in Baton Rouge, Louisiana, right next to LSU, 5 minutes walk from LSU. And the same work I do for 100 units, and I do for 404 units. So it's just the raise is big, and you need to find more investors. But in terms of lender due diligence, in terms of your due diligence, like hiring the contractors to walk all the units and making sure no stone unturned, in terms of foundation, plumbing, and all this stuff, it's exactly the same work. So the more unit you go, the less work you do per unit, if you see that way, right? So the way I started was actually I was looking at an 8-plex, to jump up from 1 unit to an 8 unit. And me and my friend were looking into Central California to buy it. And that's when it hit me, the 8 units, you go through the same exact work regardless of it's an 8 unit, because anything over 5 is commercial. So if you're getting 5, you're going through the commercial loan, going through the same pain. And the loan is getting the commercial loan is not easy at all. If you've gone through it, it's just because lenders are the biggest investor in your asset, and they are going to ask your DNA and your leg and arm before they're going to fund 75% of a 45 million deal, obviously. And so I think that's where. So I did 100 unit last year, and then I decided I'm not going to do anything less than 200 for the time and effort that we put in. So fortunately, we've just focused on few markets and got interactions with the brokers and got a pipeline of things that are coming in. I also, had a good partners that we can bounce off ideas and, underwrite and poke holes in our underwriting assumptions. It's a really, if you like business, if you like people, if you like real estate, I think, commercial real estate apartments are the way to go. At least that's what, my passion is. So, that's where I am. And I'm still holding my W-2, because, I like that one too. I've been a software engineering leader for almost 20 years, 22 years now. And, my W-2 day job is actually I'm a software director in a startup. We're actually digital for cryptocurrencies. We are a custodian, like a BNI Mellon for securities. So I like that. It's an exciting field to be in. So I like that. I'm still holding W-2 as well. So my day is pretty crazy between these deals and W-2, but I enjoy it. So as far as your last questions on the tips and tricks, I think the only thing I would say is, actually 3 of my friends we were starting at the same time, and 2 did not pursue because for these deals, you don't get instant gratification. You got to have grit. You just need to put your effort day in and day out. Sometimes you get a deal in 6 months. Sometimes you don't get a deal until a year and a half. These aren't like buying a single family home. Although, even buying single family home now in Austin or, Dallas is, it takes probably 6 to 9 months, same amount as the, multifamily. So the only trick is just, just make sure that you enjoy this, searching for deals, talking to brokers, building relationships, and just keep doing what, until you get it. That's the only trick, really. There is absolutely no entry barrier. There's nothing. I've known people with, less than $50,000 running multi-million deals, because, they don't need to put their own money. They just need to source the deal. So there's no really barrier to entry, as long as you have energy and you have, the tools that you need just to, keep going. That's the only thing I would say. But other than that, you just need to really allow to learn and talk to different people and learn. That's all. That's pretty much it. I really don't have any other presentation, so I'm open to any questions you guys have, and I'm happy to answer anything I know. If I don't know, I'm happy to get your contact and get back to you any answers that I couldn't provide.
Well, that was wonderful. I mean, I think we got a lot of great information out of that, and I really appreciate your time. I do apologize, guys. I had to turn my camera off. I'm having some internet weirdness, but so I've got a question. I wanted to know: are there, have you had any major missteps? Any lessons we can learn from things you wish had gone differently when sourcing a deal, finding a partner, lending, anything like that at all? Any essentially like, here's something I would do differently in the future kind of moment?
Yeah, absolutely. And every deal is different. So the lesson you learn from one, you can avoid it, but you're gonna, kind of get in a trap in another one. So you just need to be prepared to manage it. So that's where, the partnership is really, really important, because, one of our partners is, he's done it this multiple times. So he's kind of like, a strategic advisor as well. So having, these people around you is going to help you. So one of the missteps that we did was actually engage in a private equity fund in our deal that we closed in Atlanta, the 328 unit deal. And so they said they're going to give us a $3.5 million check, but they're going to be, above investors in terms of getting the dividends. Basically, they want to get right after the lender. So we agreed because it's a big check and they wanted a little bit more preferred return. So we agreed to that because the deal worked and everything. But they pulled out at the last minute, like 2-3 weeks before closing. We are struggling to raise another $3.5 million because they said, well, the property doesn't meet our criteria, or even though they've done their research and whatnot. So that's one thing that. So finally, we raised it in 2 weeks, but it was those 2 weeks were really horrible. So I would say, when one of the missteps was actually just relying on a single source for a fund. So we are right now in our deal, even though PEs they came and said that we are willing to partner, we are still going ahead and raising everything on our own because we don't want to get into that. Another thing was like in sourcing, you would find, like, especially for some of the areas like Austin or Dallas, you would find people, institutional investors who are ready to take 3%, 4% cash on cash. So if you get into a best and final and the seller is saying, okay, I have another offer like this and what's your best, and you're like, yeah, it doesn't work for me, man, just walk out, because your investors are looking for a different returns than theirs. So I would not compete with an institutional investor at all for any of the asset. It just, it doesn't work. So, yeah. And like I said, every deal is a little different, and, we do kind of get in a sort of a trap and then just get out. So it's that's why, having great partners are really, really important. People who's done this many times over. So, especially if you're getting started, that's very, very critical.
I have learned a couple of those similar lessons myself, so I can echo for sure the partnership aspect of it. Awesome. Well, Julie, what else do we have for us?
It's like a marriage, right? I mean, you're gonna live through for 5, 7, 6 years. You're going to be talking every day, so you better have good partners, because until you exit, you're going to be partners. And also, who knows, you might get another, like, all 3 of our deals, the 3 partners we have are the main sponsors. So we have to make decisions day in and day out in terms of managing asset and all the other stuff. So yeah, definitely agreed.